Okay, let's have a look at the Euro US for the 11th of November. Asia had moved, so I was in a little late on this drift down. I was waiting for a pullback to this bounce point through there and actually took my trade there. Right, wasn't overly enthused with the bounce. It didn't break the top of the channel, so I was hopeful of it coming back to here. When it hit that price point, I've gone to break even and the market's travelled down. If you started a little later than I did, then your next trigger is through this channel, so the next bounce point here. You would put your entry order on that wick just there and it'd be activated there. That would be the last attempted trade in this drift down. I'd be expecting a bounce sometime soon. There's a reasonable double channel through there. Okay, so we can have a look at the overall move, which is, there's your first bounce point. You'd be expecting it to bounce here, and you can see that the last micro channel had me out on the low just there. So that was 15 pips from memory, 15 pips, and your trade is here. Now I took that trade manually, as I took this one manually, and I'll explain the negatives to that. Entry orders are better, you get filled better in most cases. If you have to take the trade manually, then the market oscillation during the time the trade is being placed can impact your price. Alright, let's have a look at where we think this is going. There's the low, C-click it, that's the channel it came from. Our expectations, it's going here. Market pushes up, so we're pretty excited, and then there's a pullback. It's not too aggressive a pullback, but it did take a long time. I like short, quick price moves more to this extent than a lot of uncertainty. So in that case, pull your take profit back to a more conservative level. So we've used that pullback there as being the 50%. Take profit there, which gives you another 16, so 15 pips. That brings it to 30 pips so far for the Frankfurt session. I didn't take a short through here. My expectation was it was going through here. Initially, entry order sitting there, which wasn't activated. It pushed back up again. I changed my entry order to here. Now you can see you only have a minute or two to do these entry orders, sometimes even less. So the Wolf Trading software I use, all I have to do is press B and N and click, and an entry order is placed there immediately with all my parameters. So it's quick for me to create and delete orders. So I've been popped in there. Market pulls up to here. We're expecting there as the target from that previous channel, and then we look at this last micro channel. So C-click, and there's your take profit. Okay, so there's an additional 16 pips, another 15 pips, brings us to 45 pips. As I said, I manually pressed sell, and the market reacted very quickly, so I was not served until about here. There's no fault of my broker. The market just moves fast. You're Forex traders, you know what I'm talking about. Sometimes it's in your favor, sometimes it's against your favor, but yeah, that's the way the market moves. If you missed taking that trade for whatever reason, then you're looking at a pullback to the shoulder. So you can see these two bull wicks, and this last high is your next entry point. So that would be tripped by this trade, this wick I should say. Okay, let's have a look at our take profit. Initially, we look at the last channel. I'd be tightening up to this value. However, let's have a look at what the market does. You see a little retracement here and a push. It bounces there. So I would adjust my take profit to that value. Now you can see it does go into the yellow zone. That is the danger zone for a bounce, as you've seen before in my videos. You've got a number of options. In this case, a little bit of uncertainty. You've got 3 minutes in which to decide to close out of that trade. You can close manually, which I did, or you can be more cautious and you take profit. There's a little wick in here. You can use the lowest close value. So you could use potentially that value. Even more cautious is to use the shoulder before that. Or if you want an automated solution, as soon as the market pulls back to the last channel and starts moving, just turn on auto stop loss and turn it to, say, anywhere between 2.4 and 3.2 pips and let the market drag the stop loss down and get popped out. All right, so that was an additional 21, so 20 pips. That brings you to 65 pips for the session, and I didn't take any further trades. Just lifestyle. I worked 2 hours. I'm very happy with that as an outcome. Okay, you should have had a trade there. That's the bounce point. So through there. Now, if you had missed that bounce point, then your second entry point would be, you can see this wick through here, market's peeled off and broken through that. I would be waiting for a pullback to that micro channel, and unfortunately the pullback doesn't quite make it. You don't get that trigger. The next one is you're looking for a pullback through to that micro channel. You can see the market comes down, fails, immediately put an entry order on that low, get popped in and go to break even as soon as the market touches the top of the micro channel. So there's your second step, but that's an additional, well, let's calculate the take profit. So initially you're looking at a take profit here, but the range could be anywhere from there to there. This is the significant bounce point. Use CV to tighten up your channel. That's where your take profit would be, which is an additional 23 pips. So that'll bring you up to 88 pips for the first 3 hours of the session. Remembering, of course, to look at your overall channels. You can see here there was a relatively long drift. If you click the top and CV click the bottom, you'll see a very strong 50% line. That's a very good bounce point for the upcoming channels. You can also have a look at the overall move, and you can see that was the high of the day. CV the low of Frankfurt, and you have a very strong bounce point through there. Okay, let's go through and have a look at the US session. Okay, now normally I don't review the US session, but a few people have asked me to have a look at it. You can see channel trading works. The channels get bigger and smaller, but it is a very accurate way of reviewing bounce points. So it's bounced through here and it's gone to that value. So the 50% line should provide significant bounce points, as you can see there. If you're looking for a trigger, your first step is to put a channel in place. That was the last channel up. It came back down and bounced and pulled back. So you can see the market's reached down, bounced on this point, broken it, reached back to it, and then progressed on. So your conservative approach to that channel would be to have that in there, and when the market reached down and bounced, an entry order goes on that low, market trips it in, and then you're off and running in your long. Now, your expectation is only to here, when the market breaks that channel, you're looking for a potential take profit. Easy, C-click, C-click, you're expecting a bounce up here. Now, we get a significant bounce there, tighten up, you'll take profit to there, so you take profit here or at that high, up to you. Same, we're looking for a pullback here. Where is the 50%? Well, use the historical marker. So you're wanting or expecting the market to reach back to that level, which it does. There's a little failure, put an entry order there, get popped in, and take your next leg. The next leg gives you a take profit to here where you expect it to bounce, and same here. Your expectation is that the market is going to go up there and bounce. It goes a little further, so there, and once again you already recognize that this is the 50% of the overall move. What I do is I set up a range through here to here, so C click, CV click, and then I X click, and then I hide the channel, and I know that that is the 50% of the trading range. I'm looking for activity around that value later in the session. So you can see that's confirmation of the last microchannel, which also bounced there, which was confirmation of the upper move as well, the overall move as well. So all of those things work together to give you a strong bounce point. Hopefully this has been helpful for you. I'll come back and do the 12th tomorrow. Have a great session. Bye.